Yeah. What about the dollar? It's still struggling. The high number of COVID-19 cases could slow U.S. economic recovery. Lee, you're focused on the dollar. What's your take?
The dollar's been my sort of post-COVID trade. As opposed to tech, I've been really in the gold miners, energy. I've been long the emerging markets, and that's helping those positions. I think the dollar, what nobody's really talking about is with this dollar decline, I think we see a pause here. Everybody in the narrative has said that the weaker dollar has helped stocks in July. I think that's going to continue. I think the real story is nobody's talking about the 10-year Treasury being, at 0.5 something for the last 2 weeks. I think we're going to get an opportunity here just on a technical balance. If you look at the charts, for those people that look at charts, everybody's looking at the dollar and thinking that this decline, we're at this sort of kiss or kill moment where the dollar's found support on a technical basis. But if that continues to drop, because honestly, we're printing more money than Japan, which just kind of sounds weird if you would have told me this a year ago, that's going to continue to give momentum behind things like the gold miners or gold trade, which is directly inverse to what the dollar is doing. And I also think it's going to give a lot of credence to people like me who like the cyclicals, like the first guest, we love the value names. That's like the next big trade for next year. But also it's causing your entire emerging market basket to rise. So I think if you see a little dollar strength over the next week or so, I think that's your opportunity to get into those emerging market names. Definitely stay away from Europe, stay away from Japan. There's a million reasons why I think those economies are just not going to have the oomph that emerging markets. And so if you want to diversify out of the United States, again, not just be in tech or not be in my favorite places, which are the cyclicals, the banks, the industrials, things like that, then I think that the dollar weakness, if that subsides over the next week, I think you get into the emerging market names, and I think you ride that. I think that is going to continue because the Fed's balance sheet is going to have to continue to expand for the next 6 to 12 months, period.
Getting into emerging markets, meaning going into those local markets like China, India, Brazil, et cetera, or buying companies that are exposed to the emerging markets, Lee?
I would much rather own the actual foreign companies through, you can just get a diversified ETF that's invested in China or that's invested in emerging markets in general. Because we have to remember, the emerging market performance over the past 3 months rivals that, if not has done it slightly better than the NASDAQ, than the Qs have been. And that's, again, based on that dollar weakness. And so that's where I'm at. I understand the play on why we want to buy Caterpillar or plays that, sell a lot there. I want to buy those little curves. Also, Maria, remember, a few months ago, these things were selling at book value. So I think to get the same type of oomph as the NASDAQ 100 with a completely different valuation structure, you can make money being a value-oriented guy like me today in this market, but you have to look at the dollar to help you make that money.
All right, we will leave it there. Great conversation, guys. David Munson, Lee Munson, and Steve Dudash. We'll see you soon. Thank you so much. We got a market.